pleasure to be here in beautiful Vancouver, and it is an honor to be moderating this gold panel and getting insights from some of the smartest and brightest minds. We have our esteemed panel who's going to give us their outlook on gold and on the U.S. economy as we struggle with inflation at a 40-year high, potentially on the brink of a recession as we emerge from this era of unprecedented monetary and fiscal stimulus. So let's introduce them. We'll start with Nomi Prins. She is the best-selling author, speaker, and investigative journalist. And before her foray into journalism, Nomi worked as a managing director at Goldman Sachs. Her upcoming book is Permanent Distortion: How Financial Markets Abandoned the Real Economy Forever. We also have a renowned resource speculator, Lobo Tiggre. He is the founder and CEO of Louis James, a publication for investors, and he is also the principal analyst and editor of independentspeculator.com. And Harry Dent, the contrarian's contrarian, the founder of HS Dent Investment Management. Dent is also the president and founder of Dent Research. He is an economist and a best-selling author. His books include 0 Hour and Spending Waves. So let's start off with a big round of applause for our power panel. All right. Okay, so Lobo, I'd actually like to start with you and get your thoughts on what we're seeing right now, because gold's role, as we know, is supposed to be a safe haven in uncertain times. It's supposed to be a hedge against inflation, and it's supposed to be a store of value. Now, we have the perfect storm right now for gold to rally. We've got inflation at a 40-year high. The prospects of a recession seem to be getting bigger and bigger, more and more calls for that. Of course, we do have gold doing better than the equity markets and the crypto markets. Gold has...
And gold 2.0.
We'll get to gold 2.0. That's the crypto markets, yeah. We do have gold maintaining its value, whilst the S&P down about 15%, the NASDAQ down about 24% year to date. And of course, gold is struggling against the young US dollar, but we've also got all of these geopolitical risks. We've got Russia's invasion of Ukraine, and that conflict is not really going as Putin expected. Now we've got Sweden and Finland saying that they want to join NATO. And just to throw in some more fun, Iran is starting up its nuclear program. North Korea is shooting some missiles out to keep things exciting. So, Lobo, we seem to have all of these elements that should work in gold's favor, and yet it's trading flat. Why?
Well, and yet it's only $1,800 an ounce. Oh my gosh, I should get out of this business. $1,800. I'm being a little facetious, but I think the point is to have a little perspective. When I started in this business, we were hoping that it might someday reach the lofty heights of $1,000. And here we are whining about $1,800 gold. So, you know, have a little perspective there. But to answer the question, there's a lot of answers here. One is that gold tends to lead inflation. Expectations of higher inflation ahead, I think, are very important. So when we saw gold lead, when people across the board saw what was happening in 2020, before the high inflation came in play, I think that makes sense. So why isn't it leading now with all this other scary stuff that you just outlined? Well, I hate to say it, but I think a lot of people here in this room are different from the people on the floor of the COMEX gold traders. Is anybody a COMEX trader here? Okay. Those guys don't think the way you and I do. And those guys are still drinking the transitory Kool-Aid. Those guys still think the Fed can control inflation, or that they have the tools, and so on. And so they're looking at recessionary signs. They're looking at the Fed now getting serious about fighting inflation. So as a leading indicator of this fight against inflation, actually I think it's quite remarkable that gold is still anywhere near 1,800.
All right, so people still have faith in the Fed, is what you're saying. Harry, what are your reasons? Why do you think gold isn't performing as it should, if that is indeed your perspective?
Okay. So what's happening right now, the Fed is being forced to tighten after the loosest policies in all of history, which gold likes. So tightening means the economy is going to slow and inflation's going to go down. Yes, why is gold not going up with 8.5%, 9% inflation? Because it knows it's going down. The markets know inflation's going down. Gold is number one, the best inflation hedge. It is also part of the commodity complex. It is not like stocks that goes up just because the economy goes up and down. I see gold going down in this downturn. And remember, all you have to do is look at 2008. I shouldn't have to argue this. In the downturn, gold went down and then came back with the money printing. Okay, that's what it did. So this gold, I think, is going to do the best in history because of one nation. What nation do you think people most love gold? Women in what nation? India is the next China. Gold will have its day in the next boom, but I think it's going to go down about 50% first, like it did in 2008.
All right. Nomi, let's talk about the Fed, because Harry and Lobo still think that people have faith in the Fed. We do have, well, that people think that the Fed, they don't, but that people think the Fed is going to be able to get things under control. Now, we do have Jerome Powell. In fact, he actually said today, gold a little bit down today, because Jerome Powell said today that he's going to be more aggressive with his tightening, and he won't hesitate to get rates up to neutral if that's what it's going to take. But at the same time, Nomi, we have former Fed Chair Ben Bernanke. He's saying, well, guess what? The Fed waited a bit too long here. Hindsight is great, right?
Yeah.
Turns out inflation is not transitory. And he is saying as the Fed tightens, that is going to bring about a bigger risk of recession. And the recession warnings are increasing. The former CEO of Goldman Sachs, Lloyd Blankfein, just the latest to raise the alarm on that front. So, Nomi, with regards to the Fed, do you see the Fed being able to really keep this aggressive tightening schedule?
No. And also the thing about the Fed is that if there's like a big arrow anywhere pointing in one direction, the Fed will kind of look at it and be like, okay, we should go over there. They're late. And generally overzealous in whatever they do in terms of what they communicate they will do. In the wake of the pandemic, as it was hitting, of course, the Fed doubled the size of its book from about $4 trillion to $9 trillion, more than doubled, in fact. And, of course, cut rates back down to 0%. And gold was happy about that. Because that story, that inflationary of money story, not inflationary of things, not this idea of transitory inflation in things like food and other types of commodities and oil, but the inflation of money is what gold most looks at. And what we have right now are two different kinds of inflation going on. The Fed likes to pretend that inflation of money doesn't happen, even though they're the ones inflating it. And so then when real inflation comes about and they say things are... Chairman Powell says things like, oh, it's transitory, relative to the fact that they ignore monetary inflation and what it does to the markets and what it might even do to the price of gold and other things. It just doesn't matter. But also what's been happening right now is we have seen this massive appreciation in the dollar instead of in gold. And that's the result of a lot of the things that Michelle, you're talking about, a lot of things that we know are happening in the world. We've got high inflation. We've got the situation in Ukraine. We've got supply chain disruptions. We have a lot of things going on. And what's happened is gold and the dollar have been in this little dance, and the dollar has been kind of leading the way. And that's what we see right now. So that safe haven inflationary combination has basically shown more brightly on the dollar right now. And that's because of all the other uncertainties in the world. What I think will happen is the Fed is going to have to walk back its tough talk about raising rates as much as it's been saying it will raise rates. It already kind of did that in March when it only raised rates 25 basis points. And before that, it had been talking about 50. And there are all these sort of scary headlines from Goldman, from Morgan Stanley, and so forth about how it was going to raise a lot over the next couple years. It did raise twice as much, 50 basis points earlier this month, but I think that it has another one or two sets of major raises to go. And then there's going to be, but we could cause a recession. But wait a minute, we're heading into an election. But wait a minute, there's other things going on here. And the minute that the Fed retreats from its tough talk into what its actual activities are, I think that's going to be very beneficial to gold, because then that flip, the dollar will still stay strong for now because of all the uncertainty, but that flip back to gold as that preservation and the inflationary fighter that it has been historically, as well as the wealth growth and preservation elements of it, will then take place.
Well, it is interesting that gold and inflation have actually been diverging since 2021. Inflation's getting higher, and the gold price is getting lower from its peak. So I want to put you a little bit on the spot right now, Lobo, because I know you love price time predictions, and that's what our audience loves as well. Where do you see gold in a year's time?
In a year's time, higher.
Higher. Can you give us a number?
No, but I will say, push back a little on Harry. I think we are going to get a recession, but I don't think it's going to be deflationary. I think it's going to be inflationary. I think we're looking at stagflation. You know, striking. Bernanke comes out now. He says, "Oh yeah, stagflation, right? Yeah, thanks." But so I see negative real rates persisting. I see that as very supportive for gold. I can see some weakness in the near term, trending sideways. I don't see a lot of downside risk in gold in the time frame you're asking about. The potential for it to break out significantly higher is there. Nominal and real all-time highs, if depending on how things go, I think within that time frame are achievable.
Do you see gold breaching 2,000 within a year and maintaining that level?
Yes, I think if it goes up there, it can keep going much higher.
Okay, Nomi?
I'm going to say 2,100 because there's a 21 in it, but also because, again, I think this dance will come back. I think we'll still have real inflation, but we'll also have the Fed have to walk back some of its tough talk, which will make that inflation seem greater, monetary inflation, by not hiking rates, by not doing any of what he's been talking about as much, and that will give a lift to gold.
And Harry?
Okay, I see a replay of the 2008-2009 recession. Why? They didn't let it happen. They blew their way out of it with the greatest money printing scheme in all of history, okay? So what happened in 2000? Gold went up in the early stages because it is perceived as a safe haven. And then when the recession set in, what happened? Gold dropped 50%, went running to mommy. Sorry, that's what actually happened. All risk assets go down, all financial assets. Gold holds up the best. My target is as high as 2,200, 2,250 near term. If it doesn't get there quick, it's not going to happen. I'm starting to lose faith in that, but I've had that forecast well. And then in the crash, it goes down to 900 to 1,000, and that will be the buy in gold for the rest of your frickin' lifetime. You buy it then because, as I said, the people, I've traveled the world a lot, the people who love gold the most intrinsically, not for boom or bust, are Indians and Indian women, and they're going to rule the world in the next boom. India is the next China.
All right. So we have a potential buying opportunity at 900 according to your forecast, but you do see gold hitting 2,000 within the next year. Yeah. I'm curious what the audience has to say about that. By a show of hands, who here thinks that we're going to have gold breach 2,000 within the next year? Not everybody. I think we have a bit of I'm eyeballing a 50-50 split. Anybody, the other side, I'm assuming, doesn't. All right. Well, let's talk a little bit about long-term factors here. Harry, you have an outlook for the next 10 years when this crash that you predict happens, and you're predicting a deflationary environment, and then you're...
Did you say inflationary?
Deflationary. Deflationary environment.
Deflation. We haven't seen it since the 30s, okay? So it's hard to understand.
So why don't you give us your outlook for gold over the next decade?
Okay, first of all, the biggest number in the world, 560 trillion by my last count, is financial assets. 6 to 7 times global GDP. This is everything has bubbled with this money printing since 2008-9. Weak economy compensated by massive money printing. The economy doesn't grow that much, but inflation, we finally getting inflation, and all this money has to go somewhere. It went into financial assets. Every financial asset you own is going to go down. Gold will do the best if you have to hold them all. I say get in cash and wait and buy. And again, global stocks, particularly Asia and India, will do the best coming out of this crash, and gold will do the best in the commodity complex coming out of this. But everything goes down. I know that sounds crazy. That's what happens when financial assets bubble up across the board. They all have to come back down just to reality.
All right, Lobo, I want to get your thoughts on how you see, because you mentioned digital gold, as it's called. You mentioned Bitcoin a bit earlier, so I want to get your thoughts on how you see that impacting the gold price, because it has been seen by many as competition to gold. JP Morgan, for example, has cited that there has been outflows from institutional investors from gold into Bitcoin. Bitcoin is down around, 56% from its high. Gold is down about 12% from its high, give or take. we have this environment which many say challenges the narrative that Bitcoin is a hedge against inflation, a store of value asset, and a safe haven. So firstly, are you surprised that we're not seeing more money flowing into gold as a result of this crypto meltdown that we're seeing at the moment?
No. The hodling religion is pretty well set in there. But I got to say, well, one, I have to actually agree with Harry that in a market crash, everything gets sold. That's no question. Gold gets sold. It happened in 2020, happened in 2028. But I see a V-shaped thing. That's different from a protracted recession and downturn. But a crash takes everything down, and then rapid recovery. But to gold 2.0, whatever else we can say, just look at what's happened over the last 6 months. Stocks going down into bear markets, gold 2.0 dropping half, and here we are whining about gold, trading along sideways. To me, that looks like outperformance. And yeah. I think it's, for gold itself, the stocks, that's a different thing when we're speculating in stocks, but for gold itself, what we really want is stability. That's what a safe haven is. And so for gold to do what it's doing now, I think it's actually a stellar performance, especially given what Nomi is saying about the higher dollar.
Right.
Gold's priced in dollars. Sorry, to answer the question real quick, I think that people will start waking up. I'm reminded, though, of Galbraith's comments on the crash of 1929 and all these downs and then the plateaus and how protracted that was and how long it took people to give up hope and to lose trust in this institution that had made them money through the roaring 20s. I think that's what we're looking at in gold 2.0. And by the way, I'm not hostile to cryptos. I love the idea of the market responding to government mismanagement of money supplies. I just have no way to value any of these things, so I kind of watch them from a distance.
So you think that, just to recap that, you think that Bitcoin's future as gold 2.0 is going to be challenged in the next 5 years or so?
Oh, absolutely. I'm not of the cryptos, or the crypto crowd, the ones I disagree with the most are the Bitcoin maximalist. It's like the one ring of Mordor that will consume them all in the end. I just don't buy that argument. I can see use cases. I can see cryptos that, do something or support apps that do something in the real world having some kind of, value to underpin them.
Right.
And, may the best currency win. But is it going to be Bitcoin? I'm actually kind of skeptical on that.
All right, that's for another panel. That's a conversation for another time. But interesting that we haven't seen that flow into gold yet. No, but you mentioned the strength of the US dollar, and that has certainly helped US Treasuries and will continue to help US Treasuries, which is Harry's point, but has been a bit of a struggle for gold. One thing we're seeing right now is the US dollar is strong because of this conflict in Ukraine. But there are many who are of the opinion that that is going to actually backfire against the dollar and play in gold's favor. That we've seen Russia now peg the ruble to gold, 5,000 ounces of gold for a ruble. They're forcing people that want to buy their commodities to pay in ruble. So basically, they're forcing people to give them gold to bolster the ruble. And this is leading to a larger conversation that Russia may be moving towards a permanent gold-backed trading system in cooperation with China, in cooperation with India, which Harry has quite rightly pointed out loves its gold. And this whole notion of the weaponizing of the US dollar that we've seen right now is going to be detrimental to its status as a global reserve asset, and that gold could be the beneficiary of that. What are your thoughts there?
So again, as you mentioned, as I said, that the dollar has been strong in this current very uncertain environment, and even, for example, against the euro, there's a straight line up basically since 2008 with a little bit of bobbling along the way. But in particular, when there is uncertainty of a lot of different elements, and geopolitical uncertainty as it is today is a part of that, we do have that dollar appreciation. We've seen that. And also, again, the fact that the Fed has been sort of messaging its really, really hawkish stance. That has also lent credence to the dollar relative to other currencies. The ECB may want to raise rates, but the thing is they can't do too much because they have a problem in terms of all of the weaknesses of their economy that's going to be coming in because of the conflict that's going on in the Ukraine. So there's just a lot of geopolitics around the world that have, again, kept the dollar strong. And to Lobo's point, but gold has really kept up with the uncertainty exit aspect of what's been going on in the stock market and in the financial assets in the last few months. Again, on fears that the Fed's going to take away its third-party bowl of money, and also on just generally what's going on in the world. So I think we are going to see that normalization of gold that has retained pretty much, with a little bit of dipping, but pretty much relative to other assets, a lot of its value. I don't think the dollar is really going to lose its reserve currency status in any significant way. It's just got too far a head start. But I do think that gold will catch up because of the preservation that it's shown in this period of time, even as the dollar has been appreciating.
So very big picture, you do not see gold playing a bigger role in a global financial system with some of the countries that, let's say, have a more hostile attitude towards the U.S. bifurcating into two separate financial systems? I'm talking like a 5-10 year, let's go with 10-year time horizon.
Yeah, so again, gold will come up in terms of its role in the world, in terms of relative as a safe haven, relative to wealth preservation, relative to trading. But that's why it's going to gain in strength. I just think that what's going to happen is the dollar will still be sort of dominant, but it's going to give back some of its trade, some of the currency flow and everything else because of the relationships in trade and in other currencies and in gold with some of these BRICS countries, in particular with India and Russia and China. And they both will happen kind of at the same time.
All right. Lobo, final thoughts. Where do you see the gold-dollar relationship in 10 years' time, given this potential scenario that I've outlined here?
Right. I see we're blinking red so quick.
Yeah.
I call it the gold-dollar exchange ratio. I agree with everything Nomi said, but I just have to say, this strength of the dollar is in Forex. It's not actual strength. Anybody going to the store knows it's not actual strength. I think the emperor has no clothes. I think everybody in this room knows that. I think in not very long time, the broader world realizes that, so the Forex strength of the dollar, given all these other factors, I think goes away, and that's when gold shines. I don't know exactly what makes that happen, but at some point, people will see the emperor has no clothes.
All right, Harry, I'm going to give you the last word as we are running out of time here.
Okay. In the downturn, gold down, dollar up. Exactly what happened in 2008, except for bigger this time, because that was a deep recession. This will be a short depression, because we didn't get to do the cleaning out that the economies do. In the long term, opposite. We are not the dominant country in the world anymore. Will not be as Asia rises and rises, and we get older like Europe's already done before us. Dollar down, gold up in the long term as the favored commodity of, who I say, Indians, the next big boom in the world. India is going to be the next China. End of story, unless they screw it up so bad. They're going to be the next big thing. And gold, that's gold's biggest friend. So for the first time in history, gold goes on, by the way, 30-year commodity cycle. You know that, right? Well, the next one's 2038 to 40. Gold has not only a global boom favored by India, who like the gold, but it'll be the next big commodity cycle as well. So that's when I see gold doing its best, around 2037 to 40. And I think it could get to my target is it could get as high as 5,000. It's just going to go to 900 to 1,000 first.
All right, 5,000 gold in 10 years' time and pick it up at 900. We'll leave with that parting advice from Harry Dent. Thank you so much, Harry, Lobo Tiggre, Nomi Prins, and thank you all for coming and listening to this gold panel. And we will all be having more detailed conversations with all of these fantastic panelists on Kitco News. So be sure to check us out there. All right, thanks, everyone.